Mr. Secretary, we have to start with the news, and we've been watching it all morning long. What's going on over in Hong Kong with the protests trying to stop this legislation, this extradition legislation? As we know, Secretary of State Pompeo has expressed his concern about what's going on over there. Now we have Nancy Pelosi, the Speaker of the House, and she's taken a position that really affects you, I think, directly, potentially. She says the extradition bill imperils the strong U.S.-Hong Kong relationship that has flourished for 2 decades. If it passes, the Congress has no choice but to reassess whether Hong Kong is sufficiently autonomous. Of course, that would raise substantial questions about the free trade arrangements that we have with Hong Kong. Is the position of the administration and your position that, in fact, we should consider revising our relationship with Hong Kong if they pass this legislation?
I think it's a very complicated issue and should be dealt with within the overall context. I think to just try to separate out one issue is very, very tricky. I do think it's a very, very unpleasant situation and a big change apparently in Chinese policy toward Hong Kong. So I think we need to watch very carefully the developments and factor it into the overall picture.
So let's put it into the overall picture, as you put it. The president just yesterday said that he really wants to meet with President Xi at the end of the month over in Osaka for the G20. What is the prospect of our coming to at least, if not a final agreement, but at least a truce by the end of the month?
Well, I don't know what you mean by a truce. Where we situate at the moment is we thought there was a pretty good progress on a whole variety of scores in the negotiations. The Chinese then backtracked on what we thought were some significant commitments, and that's what led to the impasse. So probably at the 40,000-foot level, the level of the two presidents, the most that'll be done is they'll decide that it's worth reopening. But I don't think that a G20 pull-aside is a very likely place for the details of a 2,500-page agreement to be worked out. That needs to be in a conference room with detailed technical people.
So let's define truce a little more specifically. At 40,000 feet, how about withholding of the additional 25% tariff on the $325 billion, I think it is, of Chinese imports? Is that a prospect that you would look forward to by the end of the month? That is to hold off on that.
I think that we shouldn't try to pick out what's going to happen from a meeting that, as I understand it, hasn't even yet been scheduled. So it's a little hard to say what's going to be the subject matter when we don't know for certain whether or not they'll even have a meeting. And if they have a meeting, will it be a brief pull-aside? Will it be a dinner? What will be the details? A little early to speculate.
Mr. Secretary, if you weave this conversation into what we're seeing in Hong Kong, what we've learned from the administration is that there's no qualms with mixing geopolitics with trade conversations. What would the U.S. do to use the Hong Kong situation as leverage against Xi Jinping in trade talks?
Oh, I don't know that the Hong Kong situation is leverage. The real leverage is the tariffs. That's always been the leverage, and that continues to be the main leverage.
So talking about the tariffs quite specifically, one of the questions I think that those of us who deal with the markets and with businesses have is the goal here to use the tariffs toward the end of a new trade relations with China? Or are the tariffs in themselves good? Because sometimes President Trump suggests he's perfectly happy with the tariffs because it puts money into the U.S. Treasury. So is it pretty much if the tariffs are there, that's fine too? Or is it that we would rather not have tariffs, we're just using them to get to a deal?
Well, I think it's always easier and better if you can make a deal, but a deal and a proper deal aren't necessarily the same thing. The president is wedded to a deal that embraces a number of very important principles. First, to ease the current trade deficit, purchase of more goods on a current basis. That's not very hard, because the Chinese have to buy those goods from somewhere. The second, which is harder, are the structural reforms. Respect for intellectual property, not requiring partnerships, not forcing technology transfers, opening a level playing field for market access, all of those things that take legislation, regulation, and enforcement. And then the third thing, which is the hardest, is in case either party doesn't live up to the terms of the agreement, what is the enforcement mechanism? What can the parties do to make sure that these deals that are written on paper become deals in reality? That's the hardest part, and in many ways that's the most important part, and it's part of where the problem came in with the breakdown in the last talks. So it's a whole series of complicated issues, all of which need to be addressed.
Mr. Secretary, let's also go back to Huawei, because that's something you and I have talked about in the past. We have some sanctions in place on Huawei. We now have a suggestion from the acting OMB director that, in fact, we might back off on let's postpone the Huawei ban. And the president himself has once again suggested Huawei might get folded in to an overall trade deal. Is there some room there to negotiate over Huawei with the Chinese?
Well, as I understand it, what the acting director of OMB suggested was nothing that has to do either with the pending litigation against Huawei and its chief financial officer, nor does it have anything to do with Commerce Department putting Huawei on the list. What it does have to do with is a separate order talking about supply chain and Huawei's position in it and the ability of U.S. government entities to deal with it. So the Huawei picture itself is very complicated, has many dimensions to it, but it's my understanding that the OMB concern was strictly with some technical timing issues of the third one that I mentioned.
Mr. Secretary, a lot of headlines were made yesterday when President Trump referred to a secret agreement with Mexico. Can you give any insight into what that may be, this very long and very good secret agreement with Mexico?
I think the real key in terms of the détente with Mexico isn't what scrap of paper has what words on it. I think the real key is, will the Mexicans do what they said they will do and what I believe they will do, namely really start to crack down, really start to prevent too many people from coming in over their southern borders from Guatemala and Nicaragua. Second, will they deal with these bands of migrants wandering through their country toward the northern border with us? And then third, will they help us deal with the problem at the northern border? We need solutions to all three components of that equation. I believe they will act in good faith. I believe you will see in fairly short order the numbers go down. If not, then there will have to be more actions taken.
Well,
but I believe we're en route to a very good solution.
But based on the market reaction when President Trump said that they were going to increase tariffs on Mexico every month until an immigration deal was made, don't you think it's important for market participants to know what that secret agreement is, considering that the market is very vulnerable to these kind of shifts in trade policy?
Well, I think the most important thing is we need to solve the border crisis, and we need to get USMCA passed through the Congress. Ambassador Lighthizer now took the formal step he had to vis-a-vis the Congress, namely putting forward the matter. It's now up to Speaker Pelosi to decide whether to let the House bring this up for consideration. We believe that if she does, the votes are there, both in the House and in the Senate. So the real question on USMCA, which is, after all, the big thing that markets should be focusing on, the real key is, will Speaker Pelosi let the bill come to the floor, let the members debate it, and let them have a vote on it?
And as we know, there are members of the Democratic caucus on the House side who say they are for the USMCA. They think it's better than NAFTA, but they want some modification. If not in the fundamental agreement, in the side letter, some clarification. They've been talking with Ambassador Lighthizer about that. What is the prospect of that? Are you in favor of making whatever amendments need to be made to get those votes?
I believe that the votes are there for the agreement as it stands. And there's a limit to how much modification you can make with the enabling resolutions. Remember, the Mexican Senate is in the process of voting on the actual agreement, both houses in Mexico. Very shortly, we believe the Canadian Parliament will act on it. Once they've taken action, the freedom of motion becomes much smaller, because now you're asking other countries to change their practices. So I don't think there's a lot of room for major change in it. And more importantly, there's not a major change that's needed. This agreement has much better provisions, much better enforcement than any trade agreement we have ever had, including the old NAFTA agreement, for which many of these same folks in the Congress who say this one isn't tough enough, they voted for the old one. So I think it's a little ludicrous to say we acknowledge that the new one is better than what we had voted on before, but we still want more. I think for some of them, it's just a big excuse not to vote on the issue, because I think a lot of the Democrats simply don't want to give the president the victory.
Mr. Secretary, there's also the prospect of possible tariffs, particularly on autos, with respect to Europe. And that was put off. There was a specific extension given on that. Where do we stand on that? The time clock is ticking. Are we making progress toward an agreement with Europe on trade?
Well, the time clock is a 180-day clock from roughly the 17th of May. So there's plenty of time within that. And the idea of that extension, the president wanted more negotiations to be underway and gave quite a generous amount of time for that to happen. Problem on the European side, as you know, they've just had their parliamentary elections. You're going to have a whole new set of staffs at the European Commission. We don't know who will be the president. We don't know who will be the trade minister. So until they get their act together and then give the new trade commissioner a mandate, it's very unlikely that substantial progress can be made until those thresholds are crossed.
So having Europe get their economic act together, as you put it, would be tricky. So what is the worst case scenario that you're outlining potentially if there is no movement, particularly when it comes to negotiating export quotas with Europe?
Export quotas at the U.S.?
Yeah, so the EU is not open to
question?
negotiating those. So what is your sort of, all right, if nothing happens, this is my zinger to Europe, this is what we're going to throw at it?
Well, the president has available to himself the auto tariffs. He has a whole bunch of other tools. Let's not prejudge what he might do under some hypothetical situation. Hopefully, all of these things will end with some sort of negotiation. If they don't, the president has made it totally clear that he's happy with the tariff alternatives as a general matter.
Mr. Secretary, let's turn to the subject of currency. There is pending, you've had a notice in Federal Register now of a modification in the countervailing duty regulations that would expand the extent to which you could take that into account as a subsidy, essentially, if a foreign government really modified their currency in such a way as to help exporters. Why is that necessary? I mean, the Treasury already has authority to find that a country is a currency manipulator. Why do you need dual mandate here?
Well, it isn't so much a dual mandate. Countervailing duties are specific duties imposed on a particular set of products from a particular country or countries due to facts relevant solely to that limited set of circumstances. we feel that under some circumstances there can be actions that a government took strictly to favor the currency in order to help the exports of a particular product or a particular set of products. It's a targeted thing, not a big blunderbuss. The Treasury situation is to set overall parameters, and as you know, they have said in their view at the moment there is no one manipulating the currency, but there are a number of countries they have on their watch list.
And if the Department of Commerce came up to a different conclusion, a given circumstance from the Treasury, how would that be resolved?
Well, again, you're coming to hypothetical questions. What we have put out for public comment is our proposed set of regulations. Once we receive the public comments, we will take them into account. We will then go through the interagency process and come to a final conclusion as to the details of the regulation. So it's quite premature to talk about what happens if there's a possible conflict when the regulations haven't even been written yet.
At the same time, the President of the United States has been quite outspoken about our own currency. As recently as the last day or so, he said our currency is too strong because the Federal Reserve really has not cut rates as much as they should have. If the shoe were on the other foot, if other countries followed the approach that you've proposed now in regulation for countervailing duties, might we be subject to countervailing duties if the President of the United States persuaded the Federal Reserve to cut rates?
Well, there's no reason to believe that any other country has held back on any trade actions just because we have a pending measure. There's nothing to indicate that whatsoever.
So broaden this out for us. Put on your old hat as an investor. With the market that we've seen in the last few weeks, we're still close to record highs. We have dovish central banks around the world, yet yields here in the U.S. are still closer to 2% than 3%. How do you invest? How do you look at the market?
Well, I think the Department of Ethics would be very upset if I started giving market forecasts right now. It was one thing when I was back in the private sector, and if and when I go back to the private sector, I'll be glad to give you forecasts then.
Well hedged, but a 10-year yield at 212 basis points. Like, what kind of economy does that talk to you? Like, what does that say to you about where investors think we are?
Well, the factors that investors consider is not just Federal Reserve. Investors also consider where we are in the economic cycle. They especially consider where we are in the inflation cycle. And where most economists have been wrong, particularly where the Federal Reserve staff economists have been wrong, is they have been believers in the idea that as unemployment goes down, inherently inflation will become a problem. Well, they have been simply wrong in that thesis, and I do think that that has led the Fed to be more aggressive in interest rates than the facts really warranted. We really don't have inflation, and the real purpose of monetary policy used to be to make sure we didn't get runaway inflation. Nobody thinks we're in runaway inflation right now, so I think the Fed taking a more cautious attitude on rates and reconsidering, in effect, the last rate increase that they put in, I think that's good. I think they should reconsider. I think it's quite likely that that last increase was at best premature.
So, Mr. Secretary, I don't want to get you in trouble with the Office of Government Ethics, so I'm not asking you exactly how you're investing your money or would invest your money, but taking a look at it, I mean, you were a renowned investor. Would you agree with the bond market, forget the economists at the Federal Reserve, the bond market, which suggests we are not going to see substantial growth going out in the long end of the curve? We are not anticipating a lot of growth. We're also not anticipating a lot of inflation, as you suggest. And would you base your investment thesis on those two principles going out into the foreseeable future?
I believe the economy's underlying strength is terrific. The unemployment is very low. Wages are starting to rise finally. Capital expenditures seem in pretty good shape. Worker productivity is in pretty good shape. All the key economic variables seem to be in place for a strong economy. And I think that's the important thing. Now, will there be individual months, maybe even individual quarters, where something glitches? Could be. Economies don't necessarily grow at a constant compounded rate. But I think we're in a very different economic period from what we had been in under the Obama administration. The deregulation has been very important. The new tax rules have been very important. The trade policies, very important. Consumer confidence, very important. Business confidence, very important. So I think it's oversimplification to say, well, the bond market on a particular day is doing this, that, or the other thing, and that therefore tells us where the economy will be. It's a lot more complicated than that.